Hi friends, myself Subrata Mukherjee and you are watching my channel Dr. Subrata Mukherjee Distance Learning in Commerce. Today I am going to discuss another two problem on the chapter Bad Debts and Provision for Bad Debts. This is lecture number 4 and you can see the other 3 lectures on the same chapter in the playlist section of the channel. I would like to request all the students to browse the playlist section where you will find different chapters on accounts, costing, financial management and management accounting. Students can communicate with me through email, which I have given in the description box. I have also given the link of the playlist where you will find the lectures on bad debt and provision for bad debt in the description box. The following is the extract from the trial balance of Arunabh Majumdar as on 31st December 2002. You have a bad debt of 4,000 and sundry debtors of rupees 1,50,000 and provision for bad and doubtful debts rupees 6,000. It is desired to maintain a provision of 5% for bad and doubtful debts. Give the necessary journal entries, prepare bad debts account and provision for bad and doubtful debts account. Also show how the relevant items would appear in the profit and loss account and balance sheet. So it is given in the trial balance that the bad debt of rupees 4,000. So when bad debt occurs, the general entry passed was bad debts account debit to sundry debtors 4,000. So this was given effect and the debtor balance was reduced accordingly. So the debtor balance which is given in the trial balance at rupees 1,50,000 is after giving effect of bad debt of rupees 4,000. So the next journal entry that you need to pass is to transfer the bad debt account to provision for bad and doubtful debt. So the next journal entry is provision for bad and doubtful debts account rupees 4,000 to bad debts account. Since bad debt is a nominal account, so balance in the bad debt account has to be transferred to provision for bad and doubtful debt. Now this year the provision for bad and doubtful required is 7,500. So you need to transfer the balance from profit and loss account. And the required balance that is to be transferred from profit and loss account to provision for bad and doubtful debt. So general entry that was passed is profit and loss account debit 5,500 to provision for bad and doubtful debt account. So where from you get this balance? You have a debtor balance of 1,50,000 at the end of the year and the provision required is 5%. So 5% of 1,50,000 is 7,500 plus the amount of bad debt was 4,000 minus the opening provision is rupees 6,000. So this way you will get 5,500. So basically these are the 3 journal entry you need to pass for the year. Now let us see what is the effect of the ledger. So here I have prepared the structure of the 2 ledger, bad debts account and the provision for bad and doubtful debts account. So on 31st December 2002, bad debt for rupees 4,000 occurred. So bad debt account debit to debtors. This was the journal entry you have passed and this is 4,000. So since bad debt is a nominal account, the balance in this ledger will be transferred to provision for bad and doubtful debts. So in provision for bad and doubtful debt account, you have opening balance on 1st January 2002. So I am writing here by balance BD 6,000. Now this bad debt which occurred and the amount was transferred to provision for bad and doubtful debt, you have to record it here, that is on 31st December 2002 to bad debt account. And what is the required amount of provision at the end of the year? So you have to write here to balance CD. So 1,50,000 is the amount of debtor and 5% is the required amount of provision. So 7,500. So the balancing figure you have to transfer for profit and loss account. So here I have to write by PL account, and this is the balancing figure. I have already shown you that the amount to be transferred from profit and loss account is 5,500. Now what is the impact on profit and loss account and the balance sheet? So for that purpose you need to prepare the abstract of profit and loss account. So this is the abstract of profit and loss account for the year ended 31st December 2002. And there is only one entry in the profit and loss account, and that is to provision for bad and doubtful debt. The amount that was transferred from profit and loss account to provision for bad and doubtful debt is rupees 5,500. And what is the situation in the balance sheet? So balance sheet as at 31st December 2002. So this is also the abstract balance sheet, and on the asset side we have the sundry debtors, and the balance of sundry debtor is 1,50,000 less the closing provision, that is the provision for bad and doubtful debt is rupees 7,500. So the net balance of sundry debtor is 1,42,500. On 31st December 2001, sundry debtors and provision for bad debts stood at rupees 60,000 and rupees 4,500 respectively. During the year 2002, bad debts amounted to rupees 3,460 were written off. On 30th June 2002, an amount of rupees 240 was received on account of a bad debt written off as bad debt last year. The debtors list on 31st December 2002 was verified, and it was found that amongst sundry debtors amounting to rupees 40,680, Sri Bacharam, who owed rupees 680, was to be written off as bad. It was decided to maintain the provision for bad debts at the same percentage as it was on 31st December 2001. Prepare bad debts account and provision for bad debts account. Also show how the relevant items would appear in the profit and loss account and balance sheet. So here I have prepared the structure of the bad debt account, the provision for bad debt account, the abstract of profit and loss account for the year ended 31st December 2002, and the balance sheet as at 31st December 2002. So during the year 31st December 2002, bad debt took place. So the bad debt account will be debited and credit will be given to debtors account. So I am writing here bad debt account debit to debtors, and the amount is 3,460. Now again, there was a further bad debt of 680 because a debtor, Mr. Bacharam, could not pay 680. So you have to write here on 31st December 2002 to sundry debtors account 680. So there is a total of 4,140, and this amount will be transferred to provision for bad and doubtful debt or provision for bad debt account. So here I am writing by provision for bad debts account 4,140. In the question it is given the balance on 31st December 2001. It means the balance on 1st January 2002 is 4,500. So in provision for bad debt account I am writing by balance BD 4,500. And you have to transfer the balance on bad debt account. So here I have to write to bad debt account 4,140. Now on 31st December 2002, you need to calculate what is the required amount of provision for bad debt. Now it is given in the question, the required percentage for provision for bad debt will remain the same as it was last year. So what is the percentage of provision for bad debt on Sunday debtors? So let us calculate a small working. So here I am showing you percentage of provision for bad debts as on 31st December 2001. So this is rupees 4,500. This was the opening balance of provision for bad debt, and the amount of Sunday debtor was 60,000. So percentage of provision for bad debt is 7.5%. So the same percentage will be maintained at the end of the year. So the closing debtor given in the question is rupees 40,000. 40,680 was the debtor balance. From the debtor balance, you have to reduce 680 rupees, which was treated as bad. So 40,680 minus 680, you will get 40,000 multiplied by 7.5% is rupees 3,000. So the amount that is to be transferred from the profit and loss account is 2,640. So this is the balancing figure. Now let us show what is the effect in profit and loss account. Now in the question it is given that on 30th June 2002, an amount of rupees 240 was received on account of a debt which was written off as bad in the last year. So what will be the journal entry for this transaction? So bad debt recovered is rupees 240. So journal entry will be cash account debit to profit and loss account. So cash account debit 240 to profit and loss account. So any bad debt recovery will be debited to cash account and credit will be given to profit and loss account. So in profit and loss account, this is the abstract of profit and loss account for the year ended 31st December 2002. So you have to debit the profit and loss account with the amount of provision required. So to provision for bad debt account is 2,640. This is the figure that will be transferred to profit and loss account, and credit will be given for bad debt recovery. So by cash account 240. Now in the balance sheet, on the asset side, we have Sunday debtors of 40,680. From this figure, you have to reduce the bad debt of 680, and from 40,000 you have to reduce the amount of provision required for bad debt. So provision for bad debt is 3,000. So this is the required amount of provision at the close of the year. So the net closing balance of Sunday debtor is rupees 37,000. So you can see here the ledgers that I have prepared: the bad debt account, the provision for bad debt account, the abstract of profit and loss account, and the abstract of balance sheet. A small working I have prepared: the required percentage of provision for bad debt as on 31st December 2001 was 7.5%, and the same percentage will be maintained at the close of the year, that is on 31st December 2002. So the amount that was debited in bad debt account was rupees 4,140, and that will be transferred to provision for bad debt. And the opening balance of provision is 4,500, and the required closing balance is 3,000. So the amount that will be transferred from profit and loss account is 2,640. So please remember that any bad debt recovery will be debited to cash account and credit will be given to profit and loss account. Hope all the students have recorded the problem with the solution in your notebook, and feel free to contact me if you have any problem in understanding. Thank you. Thanks for watching the lecture.